Bloomberg Audio Studios. Podcasts, radio, news. You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
All right, Matt Miller sitting in for Alex Steele. I'm Paul Sweeney live here in our Bloomberg Interactive Broker studio, streaming live on YouTube as well. So head over to youtube.com, search Bloomberg Podcast Live. One of the interesting stories coming out of Elon Musk, and there are many stories every single day coming from Elon Musk, and so much and so that Bloomberg has a podcast dedicated to Elon Musk. Anyway, the latest is he's looking to, raise some more money at X. An evaluation of $44 billion. It seems like I've heard that number before.
That's how much he paid for it in the first place. And he really hopes to get it back there. But our story notes that Fidelity marked down its investment in X by 70% in December.
Yep, exactly right.
So what's changed since then?
I don't know. Let's ask
He's
Max
become
Chafkin.
co-president of the United States of America.
Exactly right. Max Chafkin joins us, Bloomberg Businessweek senior reporter and co-host of the Elon Inc Podcast. So $44 billion, what are people saying about that number?
So, I mean, what we've seen is that all of Elon Musk's companies are essentially worth more today than they were before the election. And the reason, I mean, you're hinting at it jokingly, but Elon Musk happens to have a pretty good relationship with the most powerful, or one of the most powerful politicians in the world, Donald Trump, serving as a senior aide to the Trump administration in the White House, also effectively running this effort known as the Department of Government Efficiency. Right after the election, we saw the Tesla share price go way up. SpaceX is said to be raising money at a big valuation increase, and XAI also raising money. So you sort of figure that X would at least try to explore this as a possibility, just because, again, they raised a lot of outside money. We don't know, I don't believe anyway, that what this money would be for, whether it would be to buy out some existing shareholders. He did not pay for this, the entire $44 billion himself, or perhaps, they're trying to raise capital. Although my intuition would be at least some of this would probably go to some existing shareholders.
I mean, it makes sense to me that he gets a higher valuation now. I understand that because, Tesla is worth what? $500 billion or something, and that's obviously not on the fundamentals of the car business. Sorry, it's worth $1.1 trillion right now. So investors are going to want this to get a piece of XAI, for example, right? Twitter owns, I think, a big stake in XAI. Or maybe some kind of robotics that he's going to make, or I don't know, some other business that he's in. So we know that some Twitter shareholders have, or that there is some ownership stake in XAI that at least earlier shareholders are able to take advantage of. I'm not sure that these investors, I don't know exactly what they're buying here, or how much of XAI they would be getting. But you're right that XAI, which is Elon Musk's AI thing, is this fast-growing chatbot competitor to ChatGPT. Obviously, a lot of people think there's upside there, and it's using Twitter's data, and Twitter, one way or another, and Twitter shareholders, one way or another, are going to get compensated for that, whether that's coming in revenue or ownership stake. So one way or another, XAI, this other venture, is going to pay for that, and that's helping to drive the value. The other thing that's helping to drive the value is just the fact that Twitter X feels more vital than it did, say, a year ago. And that, I think, like, some of what investors, if they're buying at $44 billion or higher, are reacting to is the prospect that Trump could perhaps make policies that would somehow be, helpful to X, the company. But they're also just reacting to the fact that, like, this is basically the center of conservative media right now. This is kind of where anyone on the right, especially anyone on the kind of Trump-aligned right, is making news, is releasing stuff. It's where a lot of the big media figures are spending a lot of their time. It's basically like what Twitter was for everyone, maybe like 10 years ago. But and in certain ways, Twitter had kind of lost that, and Elon Musk has brought that back, at least in this one corner of the political world, which happens to be the corner affiliated with the president of the United States. By the way, a side question on that note. Do all journalists, even the bleeding heart liberals, which is to say all journalists, still use Twitter?
Twitter has, I'd say, proven very sticky, even for people on the left. You see a lot of people have gone over to Blue Sky. A lot of liberals have gone over to Blue Sky or Threads, are still posting on Twitter. That said, Twitter has definitely lost a bunch of celebrities. I think you're seeing media outlets, even companies, maybe not participating quite as much on Twitter. Now, I don't think that has everything to do with politics. A lot of that was happening like before the acquisition. Basically, social media in general is not proving to be as big a traffic driver. Companies are just not wanting to invest in it as much. And that was one of the reasons. Remember back 2 years ago when Elon Musk bought the company, he agreed to this price, $44 billion, and then he tried to get out of it. The price kind of fell, and there was this broader sense that all of these social media companies were just not as valuable as they had been, say, in the kind of immediate aftermath of the pandemic, when all of us just had a lot more time on our hands, perhaps, to scroll. So some of those trends have nothing to do with politics, but of course politics has everything to do with this.
Interesting. All right, we'll keep on top of that. Max Chafkin, Bloomberg Businessweek senior reporter, and he's co-host of the Elon Inc Podcast.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Cool news out of our friends from Cupertino. Apple says that it will have a more affordable iPhone 16e available February 28th. This could be important for
Isn't it the SE?
The SE? Yes.
16 SE.
16 SE, thank you.
Yeah.
16 SE. I'm thinking markets like some developing markets, because they needed a lower price iPhone.
Well, or even here for people who don't need to do much more than text and call.
Who's that?
I mean,
you looking at me?
Well, I mean, you and me, right? What are we doing besides scrolling? You've got your doom scrolling on your TikTok or whatever you're doing over there, and then you're texting and making calls. I'm not doing graphic design with my phone.
All right, I'll tell you, Anurag Rana, he covers all that technology space for Bloomberg Intelligence. He joins us here. Anurag, talk to us about Apple here. What is this new product? What are they trying to target here?
Yeah, it's actually given a bigger screen size for a smaller price. So they've taken the S out of the SE and call it the iPhone 16e, which is essentially the big zoom, big screen, faster chip, Apple Intelligence, much bigger battery life for $200 less. I think that's really the punchline from my side, is that it's $200 lower than the base model of iPhone 16, which actually should help them compete better in China, where they're struggling.
So what won't this phone be able to do? I mean, if Paul gets it, is he going to feel like he's not able to achieve as much in his daily life as he would if he got the Pro model, or will he just not notice?
Pro model will have a much more phenomenal camera. So if you're really into photography, you're not going to go for this model. You're going to go for the Pro model. But if you really want to get into the Apple ecosystem and be part of the Apple family, which I think a lot of people in emerging markets want to be, but the higher price point stops them from getting there, this is a nice way to get there. The other thing is the upgrades from 11 to 12. They actually put down a little tab on their release, which shows the battery life of this phone substantially better than the 11 and the 12 and the SE. So for all of those people who actually been hanging around with their 12 and the 11s, this is a good way to upgrade without paying a lot more.
I got the 16 Pro. I upgraded from the 11, and the battery life is awesome. So much less stress in your life. You don't have to worry about the battery and carrying around a charger.
And those pictures that you're taking, Paul.
Oh, phenomenal. Yeah. Here's my picture taking rule. If there isn't a person in the picture, I'm not taking it.
Yeah.
Like I was skiing, not one picture of me of the mountains.
Dude, I just went scuba diving for 2 weeks in Indonesia, and for the first time I said, you know what? Screw it. I'm not taking any pictures.
In the moment.
I'm not bringing a GoPro. I'm just going to look at stuff and see it with my eyes.
Anurag, is this going to be enough for Apple? Because I think about, with some of the challenges in China, boy, they have to really look even maybe more intently at India. And if you're going to be a player in India, I kind of feel like you need even a lower price phone. What is their India strategy now?
No, I think, one of the things that has happened over the last 7, 8 years is inflation has really kicked in. And these phones that started with 500, 600 and now priced at 1,100, 1,100. So, I mean, there is a bunch of, you could say, ASP going up for these phones. This is Apple's way of saying, okay, I cannot dent these markets with just features alone. Let me bring a little bit of, price flavor in it. The thing that's impressive in this case is they've actually increased the size of the screen along with high battery life. For some people, that's enough, frankly. I think when you are targeting the Indian market and the Chinese market, you're right. It's probably, $100 less would have been better. But remember, a lot of those people start with a refurbished phone from Apple, and then they want to move up. This is, I think, a nice bridge between those things and the pro models. And I think it'll work both in India and China also.
I've been having long, drawn out, deep conversations with ChatGPT in my car.
I know you're all in.
Yeah, but it has a voice, function now, so I can.
You got a friend now.
Exactly.
Okay.
I ask questions, usually about cars, and we go through a lot of stuff together, and it's fascinating and helpful to me. But one thing it can't do is work in my iOS. It can't make appointments for me, send an email, send a message, that sort of thing. Obviously, Siri can do some of that stuff, but isn't nearly as capable or intelligent, I guess if that's a word I can use, as ChatGPT. When are they going to step up their game in terms of Siri?
One of the things you have to remember, Mark, when you come to Apple, they are extremely worried about privacy and the data leaking. So I am fairly certain over the next 12 months, you will see them using more large language models to do a lot of those things, but they just have to go with their own pace, because one of the things they cannot do is dilute their brand because of some error by some other third-party provider. And I mean, it's just a matter of something coming a little bit later. I'm to be honest, not that concerned. My biggest thing is whether this thing can push towards that unit shipment problems that Apple's been facing for the past 3 years.
Anurag, thanks so much for joining us. Anurag Rana, technology analyst for Bloomberg Intelligence, joining us from that burgeoning tech hub that is known as Chicago, Illinois.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Alex Steele is out today. Paul Sweeney with you live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well, so you can see us. Go to Bloomberg, go to YouTube. Where did they go? They go to youtube.com and they search Bloomberg Podcast Live, and that's how it all works. All right, we're hearing a lot of news coming out of Washington, D.C., out of the Doge group, Elon Musk group. They're looking for efficiencies. One of the areas that they are finding is, I think there's too many people in the U.S. government. We've heard that for a long time, but they're making some big moves, laying people off, firing people across the board. We want to get a sense of kind of what that means for the government workforce. Jessica Kriegel joins us here, Chief Strategy Officer for Culture Partners. Jessica, I've seen the numbers. We've all seen the numbers in the reporting, but I haven't seen the stories of the people, how it's affecting them, what's happening to them. Because it's odd, because it used to be, boy, if you work for the government, maybe you don't make a lot of money, but you certainly have job security. That's not the case anymore.
No, job security is gone. I mean, that was the choice that we made as young people. Do we want to go into private industry and we'll make more money, but be more at risk? Or do we want to work for the government and have that job security? Because that's gone now, the only option left for the American people, if they want job security, is to upskill. They have to be better. They have to become top performers in order to claim that job security for themselves. So it's really about taking accountability. And it's sad. It's sad for the people who are losing their jobs, because if those jobs were never needed and if they are wasteful, as the right are saying, well, it wasn't their fault that they had those jobs, obviously, but now they have to pay the price.
So, I mean, Again, I don't think a lot of people would argue that our government is not bloated, to use a term, and whether that's just overall cost, overhead, whether it's people, that there can't be a lot more efficiencies probably coming out of government, both federal government, local. But the reality is a lot of times that means people and jobs. So again, the message for these folks, if they're, to the extent they're being impacted out of a job, is they need to up their game, don't they?
They do need to up their game. And that's
what we've heard. We've heard that before when manufacturing jobs were leaving this country over the last 30, 40, 50 years, that those workers will need to find new skills for this new economy. It's kind of a similar story.
It's a story as old as time. We have to evolve as industry evolves. The issue here is, I don't think actually that a lot of Democrats are necessarily angry with some of the decisions that are being made, because there probably is a lot of bloat, there probably is inefficiency. No one wants incompetence. No one wants that waste. The issue is the haste with which this is happening. I think there could be more thoughtfulness perhaps in how quickly we move, because these people are getting affected, and we're going to see that. It's going to be a big story with unemployment numbers as we see in the next few job reports, I'm sure.
Yeah, exactly. Do we know what kind of severance plans they're getting or anything like that? I haven't heard much about that either.
No, well, we saw that there was the fork option that 75,000 workers took. That was about 4% of the U.S. government. Some of the people who took that severance option then also got fired, and so there's been some administrative issues with how all of this is rolling out. Back to the haste issue, it's been a little bit messy. You see people being laid off and then being called back later that weekend when they realize, for example, they laid off people who were working on the bird flu. And then they said, no, wait, come back. The nuclear story, for example. So there's lots of chaos, and this needs to be ironed out.
Are you surprised that it's I guess Doge being led by Elon Musk seems to be at the forefront of making these decisions? Is that working well? Do we know?
Seems to be, right? But then I also saw that now they're claiming that Elon Musk is not making these decisions.
Okay.
And so really a lot of the confusion is in the massive amount of communications and headlines that are happening all at once. Everyone is trying to keep up.
I mean, I guess, again, when you think about it, whether it's in the government or in the corporate world, everybody's got to kind of adapt to this changing environment. Is that similar for the U.S. government, do you think?
Well, I think companies are going to be looking at how these decisions within the federal government will affect them. With the FHA announcement, for example, mortgage companies will be impacted. If they're not able to get mortgage insurance for low-income mortgage families that are interested in their first-time home, then they're either going to increase their rates or they're going to give out less mortgages. How does that impact people and corporations? It will have a ripple effect. This economy is a holistic system, and so one change in the federal government will ripple out.
So what's the expectation here going forward? Is this something, I mean, one could argue, again, if you think about the U.S. government, it feels like it's something that is ripe for efficiency or greater efficiency. This could be a long-term process.
Oh, yeah, this is going to take a long time. I don't think we're going to really understand the impact that this will have on our economy for 6 to 9 months. Right now, we are in the hardest part of change management. We say at Culture Partners, culture doesn't go down without a fight. And so right now there's massive resistance because it is different. Whether this different is going to be better and more efficient and more economical, we'll have to wait and see.
So what are the next steps for people that, I mean, when you're in a government role, you know, that's a whole different idea and mindset to being in the corporate world, the for-profit world. How difficult do you think it'll be for these people to adapt and maybe reskill or upskill or kind of look outside of the government, which again was seen as almost, you know, employment for life?
Yeah, it's interesting because you've seen a lot of headlines recently about Generation Z gravitating towards government work because they want the stability that they felt they couldn't get with corporations. That's now out the window, obviously. And so young people, they're going to have to do what everyone has done in the history of building their careers, which is upskill, upskill, upskill. I want to learn everything about AI right now. I want to understand how I can take control of my career by making the choice to focus on what I can control to drive results in whatever it is that I do. And if I can differentiate myself as a top performer, then I'm going to have job security because I will be in need, right? The people who are probably not the top performers are the people who are getting laid off and then getting called back 3 days later. If you go back to that environment, you've already created a dynamic in which people know, I mean, you're desperate. So that's not necessarily a good move for you either.
Do you think corporate America will take a look at what the government's doing and saying, hey, maybe we can do this too?
I think the government is looking at what corporate America has already done. The nature of layoffs has changed significantly in the last 10 years. It used to be a last-ditch effort to try and save a dying company. Now it's an efficiency tool, right? We're in the post-COVID profit-grabbing era. And so a company will put their best quarter in history and then have layoffs right afterwards, and the stock market reacts very positively. So the government is taking note from corporate America and saying, we can do that too.
30 seconds left. I learned of a new term during the pandemic, labor hoarding. Is that a thing?
Courting, as in trying to attract labor?
Well, companies are holding on to employees. They're not
hoarding.
Yeah.
Is
that a real thing?
I don't think that's a thing right now.
No.
Not anymore.
So. Yeah, interesting. So see how the times change here. Jessica Kriegel, thank you so much for joining us. Jessica Kriegel is the Chief Strategy Officer for Culture Partners, based out there in the Sacramento area.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
All right, 2023, the S&P, 23% return. Heck of a year. Did it again in 2024 with north of 20% returns for the S&P 500 index. What do you do this year? We're already up about 3.5%, 4%, but can we do it again? Ann Bartels joins us, Chief Investment Strategist at Sanctuary Wealth, joining us from New York via Zoom. So, Ann, when you talk to your clients, kind of when you're doing your year ahead letter for 2025, how did you kind of set expectations? What are the conversations you're having with your clients?
Well, our year ahead report said all that's new is old. In other words, innovation is been around for centuries. And we're just in another major phase of innovation with artificial intelligence, with blockchain, with the crypto space, also known as Web3, virtual reality. But, AI is really going to increase productivity. We're already seeing enhancements in productivity, and we think that's going to continue. So what does that mean for earnings? That means earnings can continue to grow. And, we're just getting to the end of fourth quarter earnings for last year, coming in significantly higher than expectations. And we're seeing margins expand. And what we tell clients, markets go up and down based on earnings, and we have earnings.
So it seems like, Ann, that's going to be key for this market, because I'm not sure what the Fed's going to do for us this year. Maybe one cut, maybe two, but it seems like this market, if it's going to move higher, really needs earnings. So how confident are you in that earnings growth story for this market?
Well, given the innovation that we have, I'm extremely confident. So confident that I set our target range this year to 7,200 to 7,400 on the S&P 500, which is another 20% return, which is very rare.
So is that going to have some margin, some multiple expansion? Because I know a lot of people are concerned about the valuation of this market. How do you think about that?
So they're correct. If I've gone back to 1900 on PE ratios for the S&P 500, and we're at the top of the range. There's no doubt about that. But when I study secular bull markets, and particularly 1982 through the peak of 2000, we expanded PE multiples. So if my thesis is correct that this innovation is going to continue to drive markets actually out into the end of the decade, I actually expect the PE multiples to continue to expand. I don't think we're going to get a significant contraction. I think the next time we see the market at what people may call a reasonable multiple will not be until we enter a secular bear market, which I don't think happens until the next decade.
How about just maybe, are there any risks coming out of Washington, D.C.? I think if you think about this new Trump administration, a lot of folks are very positive from an economic perspective. Lower taxes, maybe less regulation that could loosen the animal spirits a little bit. But on the other side, you've got all this talk about tariffs and other economic policies that could be, present a headwind. How do you think about Washington risk?
So the market has really dealt very well with Washington so far. And of course, we have comments from Trump again on tariffs. And I think that is knocking the markets. Yesterday, we actually hit a new record high. I think if we didn't have that comment, we'd be sitting here at another new high in the market. So I think the market needs time to digest what these tariffs really mean. And they're not a done deal. So the market doesn't like uncertainty, and what they want to know are the facts. And once they know the facts, they'll price it in, and then the market can move beyond it. So what that means is that Washington can create noise. It can create a little bit of volatility for the markets, but I don't believe it's going to ruin the bull trend in the markets.
Ann, your clients can now actually get a yield in the bond market. I mean, the 2-year Treasury is 4.3%. How are you thinking about fixed income allocations these days? Are you sticking with treasuries? Do you take some credit risk? How do you think about the fixed income side of the game?
So spreads in the fixed income market are very, very narrow, but we don't see a risk of a recession. So we don't think there's a ton of risk if you can go into, corporates. We're not a fan of treasuries. We wouldn't go long duration here either. So we're being very, very selective in where we're allocating our fixed income portfolio. With that said, though, a lot of clients like sitting in that cash that was able to get 5% and they're not moving it. So we have almost $7 trillion in the money market fund. And to be honest, I only see that going up. I don't see it going down yet.
Marianne, thank you so much. We appreciate that. Ann Bartels, Chief Investment Strategist at Sanctuary Wealth. Got a bullish call there. Again, on the S&P 500, 12-month out, 7,200 to 7,400. One of the higher numbers that we've seen out there on the street.
This is the Bloomberg Intelligence Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 10 a.m. to noon Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.